Guys, I'm back with another YouTube video, and today's video is going to be a backtesting session, and this is going to help you guys kind of understand my model and the reason why I'm taking a trade, the reason why I'm not taking a trade, and pretty much the thought process and logic behind my trades. And this will help you guys build discretion. You guys can also backtest along the same exact month I'm doing. Hopefully we can do a good month, so we can go ahead and start it. So we can name it YouTube backtest. And I'm going to change the balance to 50K. So it's like a regular, funded account. We can do NASDAQ. Oops. Got NASDAQ, and then the day. I don't know what to choose. We'll go with April. Let's actually do March 31st, so we can have the April 1st. And then we're not gonna go all the way through April. We're probably gonna do like 5 or 6 trades. So that's whatever. Create session. Okay. So I'll go over everything. I'll break down exactly my thought process so it can help you guys out. First, I'm gonna remove these blue session breaks, which I don't like. I really dislike these. Okay. Okay, there you go. So I removed that. I'm gonna remove this volume indicator. I don't really use that. Next, you want to make sure is that your time zone is correct. Next, you want to make sure that your custom settings, so start in New York is 9:30 EST. So all those are already set, and we can already click go, New York session, and we should be going to, no, that's March 31st. We need to go to April 1st. April 1st, there you go. April 1st, 6:30. So now we're going to check our 4-hour chart. So originally I go on the 4-hour just to see what market's currently at. So based off market right now, we are proceeding into a bearish 4-hour gap, which I'm not sure if we've hit yet. Let me turn on my magnet. So actually, no, we have not hit that 4-hour gap yet. So that's probably gonna be my draw. I don't really mark out draws on 4 hours, but I just mark it out just to see like a bigger breakdown on what I'm going to be targeting in the 1 hour. Unless it's the same exact draw, then that's different. So let's see. So we also have this high over here, 1 hour high, and we also have this 1 hour fair value gap. So we have this high. I don't really like this market's, actually, I'll leave it for now. And as our low, I'm going to have this low over here. And if we do fall all the way down, then this low, but I doubt. Now, I usually, if market is consolidating or chopping, I will go on the 5-minute and I will wait for a price to break out of a range. So for example, we are in a range currently. I would wait for it to break out. If not, then I go to the 1 minute and I just start trading. So from here, I'm going to wait and I'm going to see where my confirmed draws on liquidity are. So I have all these draws on liquidity marked out. Now, obviously, I'm not going to be like, okay, market's going to hit every single one. Of course not. These are kind of predictions. We don't want to predict and guess where the market's going to go. We want to actually follow through with what the market gives us. So now I'm going to wait for displacement and confirmation towards a draw on liquidity. So now let's play out the candles. Let's see what goes on. Okay, we had a bearish candle, then a bullish candle. Okay, we're kind of like messing around right now, and we're probably going higher. So as we see, we did kind of originally start off going towards this draw on liquidity, but now we're more confirming towards this. So now let's see if we can get an entry towards this draw over here. No, we do not get an entry, and market is just... Okay, so we take this lower draw. Honestly, I do not see any entries here. Possibly you could have entered something like this, but it's a low RR. You literally won't even get any risk to reward. So now that's how you know our draw on liquidity was correct. That market flips upon touching the draw on liquidity. Now we can just wait to target these higher draws, because originally I did want a higher draw to these gaps. Okay, this wasn't bad. Right here with your stop over here, target like this is not bad at all, honestly. The only reason why I wouldn't probably take this is because of how we kind of start chopping over here. I like pure displacement. So if market is going to be if market is going to be displacing towards a drawn liquidity, I want retracement followed by good displacement. I don't want this choppiness and then displacing. But let's see what market does. So we take that first draw. We do have a second draw. Okay, this is a good entry. However, it is a low RR. So the risk to reward is not going to be there, but we'll take the entry anyway. So we can put the stop loss over here. Let me turn this magnet off. And then we can target that drawn liquidity. We can target a little bit higher if anything. Now let's put this, there you go. So we get a 1-to-1 RR. Okay, let me delete this one. We don't need that anymore. So this is an okay entry. We are kind of longing off of a high, which I don't usually typically take. However, we are backtesting, so I can't really enter mid candle. But let's see what price does. Okay, perfect. So there you go. We got our first trade done. We took this draw on liquidity over here, which I believe was at 19,582. Was just a 1 hour high. Perfect. Now let's go to the next day. So again, I start off on the 4 hour. Obviously, higher time frame holds higher power. And then I'm going to do check draws on liquidity. So that's again our very low draw on liquidity. Let's go to the 1 hour. I usually mark it out on the 1 hour. I just use 4 hour for the structure. So for higher draws, we have this fair value gap over here. We have this fair value gap over here. We had this fair value gap over here. And we also have equal highs over here, which could be decent. Hold on, mark it out perfectly. Let's mark these ones. Okay, so we have pretty good draws upwards. Downwards draws, we do have this nice, pretty obvious draw on liquidity over there. So let's see what market gives us. Okay, market just flew up. Okay, now let's see what entry point we could get. Retracement. Okay, now I guess these are all out of the picture. All these draws on liquidity are out of the picture. We already blew through them. This is our only one left. Let's get a nice retracement. Okay, this is kind of iffy. Okay, we'll take this entry, but only because we have enough stop loss size. So we can put our take profit at that drawn liquidity. We have enough space to have a big stop like this to at least get a 1-to-1 RR. So let me go over the reason for the trade. So reason for the trade, we had the drawn liquidities marked out. Market opened and started flushing upwards, confirming the drawn liquidity. 2, we get a retracement, which is not a deep enough retracement. I usually like big retracements. However, it's okay because we do have enough points as a stop loss. We have an 83-point stop loss. So this stop loss is more than enough for price to come retrace even here and proceed higher, which even if we do get stopped out, I'm pretty positive that I'll re-enter because I believe that this draw will be taken just because I believe it was the equal high draw. And on top of that, again, we have a lot of room for retracement. But after the retrace, we got a little displacing candle, pretty much the size of that retracement. Now we're going to be targeting the higher. So let's enter, place order, save. Okay, there's our retrace. Should have went break even. Okay, there you go. Perfect. I usually go break even at the internal low or internal high. Or we don't really have one because we pretty much entered off of that high. This is why I don't really like longing off of high. But we're 2 for 2 so far, so 100% backtesting rate so far. Now let's keep proceeding. Next day. So again, we start off on the 4 hour. Starting off on the 4 hour, don't really we look very bearish. 1 hour, we had this new opening gap that we filled. Now we didn't take those lows, so we have that low that we're pretty much gonna take. And then we have this high over here. I don't really like targeting new highs or lows that we made, just because it's not liquidity. Okay, what market does is it works in a pattern: retrace up, or retrace down, retrace down. So whenever a new draw on liquidity, like a very recent, like let's say 1 day, a few hours ago, it doesn't have enough demand for price wanting to be like treated as a magnet and go towards it. It wants to take older draws on liquidity out. This is why, like for example, this one, which is April 2nd, compared to this one, so it's pretty much 1 day old, rather than this one being the same day. It's only what, an hour, 2 hour difference. I wouldn't really want to target that because that's still the same pretty much day. But let's go ahead and see what we can target for the day. Okay, so if we get a retracement, hopefully, okay, we'll possibly target the next draw. And no, that's way too much chop for me, honestly. At this point this day, I'll just get off. Next day, 4 hours. Let's see. Okay, so we are very bearish. We are in a 1 hour fair value gap. We don't really have much to target. We can just try this one, and then the high, I guess. I don't really like targeting. If I don't have a good draw on liquidity, I pretty much won't trade for the day, just because that's my main concept. And we are ranging. We are not going anywhere. As we see, all we're doing is we're just staying in this range, which I don't trade ranges. I trade a continuation based strategy. So that pretty much means I need extended markets. Once we're extended, that's when I bank. But again, let's go 4 hour bearish. We just tapped that new week opening gap. That would have been a very good trade too, right here. New week opening gaps and data is like the freest trades ever. Equal highs are pretty good too. Okay. We can usually we want to fill the full new week opening gap, so we can possibly target that. Okay, we're bearish, so never mind. Let's see where market's going. Okay, if we can get a nice retracement, this will be a decent trade. Okay. Honestly, right here would have not been a bad entry, like right here. But again, you are not gonna have enough RR, because I do place my stop losses at the low or the high. So I would have to place my stop loss here, and as you can see, it's not even a 1-to-1 RR. If I was to put it here at a 1-to-1, clearly I would have been stopped out right here. Wicked out, actually, not even stopped out. But no worries. Next day. What day are we even on? April 8th. So we're not even halfway yet. We'll do a few more trades and we'll stop there. Okay, 4 hour. We are bullish. We do have a 4 hour gap over here, which we have tapped into. So we have this high left. That's not news, actually. Looks like news, but no, it's not. So we have this pretty prominent high over here, which is a very good draw on liquidity. We have this 1 hour gap. So let's see what market gives us. And we are chopping. I do not like this at all. I don't even want to take an entry here. Next day. Let's see what market gives us. 4 hours. It's been a few days already. We haven't even taken a trade, which is completely okay. Again, patience is what pays. I'm up, what, $3,000 pretty much. And imagine 5 accounts, that's $15,000 already on the month. Like, let's be for real. And getting winning days is nothing. Like, it's pretty easy. So we're bearish, I'd say. We have this gap over here. It's a higher gap. Okay, we can target here. Let's go to the 4-hour. I think this is probably like my best option right here, honestly. It's just not correct. Yeah, I need to turn this on. Okay, so the draws explained. Actually, we do have one more, sorry. Okay, the draws explained. We have this 1-hour low over here. We also have this very, very prominent wick over here. It's a very prominent wick. We have this low over here. We have these lows over here. And then we have this 1-hour fair value gap over here. So we are bearish. However, we are retracing back up. So it could be a big possibility that we're retracing back up all the way to this gap too. And obviously we're retracing to that gap. We're going to pass this gap too. So let's see what market gives us. Okay, so pretty confirmed towards this draw on liquidity. We actually got a nice retracement back into this fair value gap. So now I'm looking for a displacing candle towards it, and I'll take an entry. Okay, deeper retrace, perfect. Okay, honestly, I don't like this entry yet. I would probably wait for another candle. Okay, so this is a decent entry. Again, it's going to be kind of low RR if I want to put my stop below the low. Like if I want to put it all the way down here, it's barely going to reach. Yeah, it won't reach. So what I need to do is I need to just lower it to like a 1-to-1. The reason this is okay is because technically it's still a protected stop because we do not have any gaps lower. There's pretty much, like, think of it like this. Is there a reason for price to come lower or no? In my opinion, I don't think price is worth coming lower unless it literally, there's only one option, and that's if my draw on liquidity is correct. And realistically, it's a 1-hour fair value gap. It makes sense for price wanting to go hit that 1-hour fair value gap in order to proceed lower. So again, at the end of the day, it's also backtesting. You can't really enter mid candle. I would have probably entered like somewhere around here if we were on live markets and put my stop over here, so I can at least get a 1-to-1. This is pretty much the trade I would do. But in the sake of this video, we kind of don't have the option to do that. So we're going to be entering after candle closures. So again, let's make that a 1-to-1. Turn off this magnet. And let's see what price gives us. Place order, save. Okay, I'm going to go break even here. Just because I don't trust these like sketchy 1-minute entries. Perfect. There you go. So the thing is, I went break even, risk-free trade. Even if I lost that trade, it would have went down to my stop loss, and I would have broke even. We're up on this trade too. So far, we haven't lost a trade yet. Perfect. Let's go next. Okay, so we have decent draws up and lower. We do have this low over here, all the way down here, and we do have this 1-hour fair value gap. Actually, we have two. We have this fair value gap as well as another draw. We're currently in a 1-hour fair value gap, so let's see. Bro, I'm marking on the 1 minute. I just realized that. Okay, let's redo this. So we do have this low over here. We do have this high over here. That's proceeding into a gap. I don't really have much for this day, I'm not gonna lie. Let's see what market gives us. Yeah, I don't really like this. 7:08. I usually get off 1 hour into market, so for me, market opens at 6:30, so I'd be off by like 7:30ish. Don't really like this. We're extremely chopping. Don't even want to deal with it. See what market gives us now. So we have this low over here and this high over here. We are in a bullish gap, so I don't really like trading during that. Let's check the 1 hour. Looks pretty much the same. Let's see what market gives us. And I hope this is helping you guys kind of understand my thought process on why I'm not taking trades and why I am, and how I mark out my draws and liquidity. If you guys have any specific questions, I can make a specific video on like my entry model and everything I do. Okay, so I hope you guys can understand right now why I'm not taking a trade. Why would I want to trade in this? This is no displacing, no big candles. I like trading volume and momentum. That's practically my whole strategy. So I'm just going to stay away from market conditions like this. Let's see what market has. Oh, perfect. We have a new week opening gap right here and right here. I like marking the bottom and the top. Probably the best draw I can have today. Or we have these highs over here. See what market gives us. Okay, proceeding lower. Probably want that new week opening gap. Retrace displacement down. Okay, this isn't too bad actually. Let's see. It's actually kind of okay, this is kind of sketch. Okay, so I'm probably not going to take this trade. Number one, because I don't like how the 1 hour is choppy like this. I like when the 1 hour is like this. Clean displacing momentum candles. But when prices like this and now we're displacing lower, it just kind of, I don't know if I would want to enter right now targeting, but we'll draw it out. I'm just not going to enter because I don't want to ruin the win rate. But let's enter anyway. Actually, not enter. Let's just draw it out. Let's see what market would have done. Okay, so at this point, I would have broke even. So I already would have got stopped out and not lost anything. Okay, yeah, there you go. So usually in market conditions like this, you do not want to enter trades when the 1 hour is chopping. But let's go to the next day. Okay, 1 hour. This actually, that's very recent. We have this high over here. Okay, I need to turn this magnet on, bro. So we have this high over here. We have this high over here. We have these lows over here. So pretty much market could go two different ways. We can either go higher or lower. We're pretty much consolidating again. I do not like these market conditions unless we break out of this phase. So we're going to see what market gives us. Okay, we broke out. So I'm pretty confirmed. We already took this draw, so my next draw is this one. Pretty confirmed we should be taking that draw. If not, then I probably won't trade anymore because going all the way down here is kind of like sus. Okay, hopefully we get a retrace. Okay, we got to retrace him back into a 1 minute fair value gap. Possibly a 5 minute as well. 5 minute. No, so we do not have a 5 minute gap. Now we need to wait for a confirmation up towards that draw on liquidity again. Hopefully not too big of... okay, this is pretty rough because we don't really have enough RR. So there's two things you can do. Number one would be probably entering over here, targeting the draw on liquidity, so you can have enough space for a stop loss. This is pretty decent. I would probably enter this live again. But the reason I don't like doing this is because we wicked the first draw on liquidity. If we wick the first draw on liquidity, that kind of proves to me that there's a possibility that we might just retrace and come all the way down over here and take out the lower draws on liquidity. So you have a big possibility of getting stopped out. So I probably won't enter that. It really depends on evaluation. Maybe I'd enter that. And now entering, we don't really have enough RR. Obviously, if I enter right here, I can't really target anything. Like realistically, like I can't target this. I would need to target like over here. Now let's see if we have a higher draw, which we don't. The next higher draw would be here, and it would be too far because we would have to enter all the way over here. But I'll play it out. I'm not gonna enter. Okay, yeah, so you would already got stopped out. Yep, consolidating. Yeah, so pretty much the only trade you guys could possibly take is something like this, I'd say. But again, there's always a risk because we did wick that first draw on liquidity. I always want to take the first draw on liquidity. If not, then of course I move on to the next one. However, the more draws on liquidity you have, the more mistakes on making your draws on liquidity could be. Obviously, if I have 10 draws on liquidity, not all 10 could be correct. But if I only have 2, then those two are the really strong and solid ones. Overall, that's it for this video. I'll definitely make more of these backtest videos if it helps you guys, or any confluence videos, any strategy videos you guys want. Let's go to the analytics. So our total payment of $4,500. This is only, I believe, risking 1%. I'm not sure exactly. 100% win rate. We took 3 total trades. On average, our RR was literally 1. Let's see. So days apart was a few days apart. Within, like, I'd say 2 weeks, we took 3 trades, which is completely normal for my type of strategy. Again, I take small wins, low RR, but I have a higher win rate. Like, for example, this is a 100% win rate in 2 weeks. In the month, I'd probably lose 1, get around an 85% win rate. This is exactly the stuff that I like. I like taking small wins rather than taking a 1 to 10 RR, for example, but losing like half the month and only making my big money off one trade. I don't really like that. It's harsh on mentality as well, like I mentioned in the previous video. Overall, if you guys want to learn how to trade, you guys can message me or DM me on Instagram, or join my completely free Discord with the link in my bio and link in my description bio. Without further ado, I'll see you guys in the next video. And if you guys want, you guys can DM me for a one-on-one mentorship or personal help. One-on-one with me, you guys get my direct access to my phone number, Zoom calls with me, everything you guys need to actually, I'll hold your hand to profitability. If you guys don't want that, complete free Discord as well. Exactly, like, everything will be provided in there. Every video you guys want, any video suggestions you guys have, comment it down below, or send it in the Discord chat or the YouTube suggestions. And I'll see you guys in the next video.